Good morning, everybody. It's a pleasure to be here this morning. Today is the 26th day in the month of July 2022. My name is Heritage at markets analyst at HFM Nigeria. And as always, we check through the markets, find out what the big stories are, how they are affecting asset prices, what the overall sentiment is, and then if all of this provide opportunities, and then how we can take advantage of it. But like always, please note that this is just a general marketing communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as investment advice or investment recommendation. This is acknowledged that investment and FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall environment is that law that slow, mixed, lackluster, tentative market environment, that we had even coming from yesterday's session and all before the key FOMC meeting that we have tomorrow. Now, like I said yesterday, whenever we're expecting a major event like the FOMC meeting, especially when it's a key one where there's no particular clear, expectation fully in terms of how the Fed will go, and there's so much indecisiveness heading into it. Markets usually just lay in wait before the meeting and nothing really heavy. Then nobody's really excited. There's no appetite for big moves right before, the meeting. Now let's just really run through what I'd written down earlier. I said Tuesday, yes, July 26th. All right, pre-FOMC lull continues to play out in markets. Now markets traded cautiously through yesterday's session as focus remains on the key FOMC meeting that's tomorrow. And that continues to be the story even in today's session in the run-up to the decision, where the key bone of contention from the meeting would be whether the Fed would keep their eyes on the inflation mandates, on trying to get inflation back under control by hiking policies and being, expecting stronger hikes, or starts to worry themselves or concern themselves about a slowing economy with data being evident, showing that there's a slowdown as well, and looking to, calm down in their hawkish talk, not necessarily not hiking, still hiking, but then point forward that, they might start to slow down or just stress, the worry in the economy right now. So it's either one of those two things, and that's where market focus really is right now. So that's on one side. In terms of the big stories, Russia cuts gas supply into Germany. As at the start of the reopening of the Nord Stream pipeline, we had about 40% general, capacity flow through. Right now, it's been cut and cut and cut. It was cut to 33%. Let's talk about 20% now, right? Now, clearly, that escalates the energy crisis in Europe. It reduces, gas basically powers the entire place, and then that slows down economic activities, slows down productivity, production, manufacturing. So many, negative effect from that because of the heavy reliance of Europe generally on, Russian gas, right? It could also increase gas shortage as well in Germany ahead of the winter months, right? So all of this is not a good input for the euro, but we haven't really seen the euro, really been hit heavily by this just yet. Mostly it's oil prices that are really reacting to this and really enjoying the upside because, lower supply clearly supports price, and oil prices are higher today. Was up yesterday, continue up as well in today's session. You look at the different asset classes, equity futures, for example, most of them are flat. Some of them, ups and downs on general basis, but mostly flat. Actually, the US futures mostly flat. But generally there's still that overall, cautious feel, negative flow, still evident. So there's that to hold on to. US 500 is near unchanged levels. That's one of the major bounces that I like to look at. You look at the commodity side, most of them are generally higher today. Apart from the fact that oil prices are higher, even base metals are also higher. Now the talk is, weaker USD over the last couple of sessions, like weak has also contributed to that, higher side of in commodity prices. So there's that, and then that also helps with the commodity linked currency. We'll talk about that now in a moment. Right, so there's that. On the bond yield side, most of them are down across board. So you can see commodities higher, bond yields down, equities mixed. The VIX and the measures of volatility are generally higher. All of this highlights a cautiously mixed environment in the market. So basically mixed, yes, because of the different ways or the disjointed flows in asset classes, but then there's still the overall negative, cloud really, over the markets. You cross over to FX. The Aussie and the Loni are top of the majors. Australian dollar is leading the majors. CAD is also strong up there as well. Now, this has been supported by higher, commodity prices generally for the Australian dollar, even base metals as well have been supporting the AUD, and higher oil prices have been supporting the CAD in its own self. While on the other hand, NZD, which normally would want to classify in that class, is amongst the weakest. As a matter of fact, is the laggard in today's session, weakest across board. Now, mind you, the moves are not all that big, so there's that to put at the back of mind. But why is NZD weakest? Now, earlier we had comments from the RBNZ governor, where he basically said that the bank will review its recent performance in conducting monetary policy. So now, that on the surface may not be, let's put it in context right now. And the RBNZ have been hiking rates. They're one of the first to start hiking strongly, right? Right now, they have the highest interest rate amongst the major economies, right? Joint highest with the Canadian economy, the Bank of Canada, about 2.5% there. So they've really hiked. So they're saying that they want to review the performance, in line with inflation and employment. So we've been hiking, but has it really been working? So if they're reviewing, there's a chance that they might slow down in that hawkishness, and that is one of the reasons why we're saying, NZD being weak and pressured as well in today's session. So there is that. Generally, even the pound is also one of the laggards as well in today's session, right? So like AUD card at the top side, NZD pound at the downside, and USD and then JPY are somewhere there in the middle. So that obviously still shows you the more mixed environment, that we're dealing with right now. Now, the overall market sentiment is not hinting at so much this morning. But you'll notice that there is a sense of worry remaining in markets. First of all, you look at earnings. Walmart, one of the biggest names, also took a hit, basically lowering their profit outlook going forward. So there's that. We have energy crisis in Europe to deal with. Your recession fears also in the mix there, all ahead of the FOMC meeting. So clearly there's also that to worry about. But it's likely we continue to see this push and pull remain in markets until we get this Fed decision, right? Because you look at the risks on mostly indecisive, tentative, markets really lacking the appetite to chase anything new before the key events this week. But clearly, focus will remain on Europe energy situation as well as key earnings release. But Apple set to also release its earnings as well later on. Now, looking ahead, the calendar, yes, in the ahead calendar is basically light. There's really not much, expected on the calendar. Yes, US consumer confidence and CB consumer confidence is also expected on the wires. Even that itself is very to slow down. So these are, some of the factors that we need to put into play in what we expect for the Federal Reserve in the meeting tomorrow. Now, if this comes out even worse, it basically just points to the weakness, demand. Because you look at Walmart, if they are lowering their profit outlook, it means that demand basically has fallen. And for demand to have fallen, people really don't have as much money as they used to have to buy as much product they used to buy from Walmart. So clearly, and that's just Walmart. And that obviously is a trend really in other big names as well. So all of this, we had last week major tech companies looking to cut down on spending and cut down on hiring. All of this shows that the money out there is not as much. There's that slowdown in the global economy. And if you're hiking policies into such environment, it becomes even worse for the economy itself. And that's why there's so much expectation for the Federal Reserve and there's so much patience to wait and see what they eventually say from the meeting, going forward. Now, when you have such environments like this, it usually makes sense to just be a bit more cautious. If markets are being more cautious and looking to take anything new, lacking appetite, how about we on the retail side as well? Being also in the same light, being more patient, being more cautious, in trying to force any of the moves that we are seeing so far. Let's just quickly look across board. This is a very big picture of where we are right now. The US equity space as well, equity future space as well, basically unchanged. And that's really how we started yesterday's session as well and played out the rest of the day. Started flat. Yes, it pushed up, down the peak of the European session towards the close, it pushed back down, ended up basically flat as well, ups and downs, choppy movements, and that's what we had, yesterday. Today we're starting as well flat. Nothing says we can't still have so much movement later, but it would still be a mess, still be a very big chop before we end the day, even going into Wednesday, really, until we get the FOMC meeting later later on Wednesday. So have that at the back of your mind. You look at the other, bounces as well. Basically the same flow, flat across board. Now, FTSE is pushing higher, so that's good. Part of the reason maybe we're certainly pushing higher right now, but even that generally hasn't really still gone anywhere, right? My own chart is really just, squeezed together. I'm not sure why that's the case, but we have that also there. Clearly, we're heading into resistance that we saw going back to the 20th of July. So there's that to look out for. The dollar index itself basically is still, in that chop, really. We had ups and downs, ups and downs, ups and downs in the run up to the meeting. This happened when we had the ECB meeting last week, Thursday. And then so far today, we're still, yes, we've gotten higher bits, but, net change, we're basically at flat levels. We opened here and now we're here. So not much on that front. The VIX itself still showing us that overall flat flow, right? Still not hinting at so much. Oil prices, yes, are higher today. Um, in line with the whole, low supply in terms of Russian gas. So yesterday we had asset US oil push higher. Today as well, pushing higher as well, up about 2% already today. Interesting if this continues to squeeze, if the gas situation continues to squeeze as well, further upside could be expected. $100 per barrel is not so far off, right? So clearly we're looking at that as well. And then, and so on and so forth. Now, close over to the currency space, right? If you look at the strongest currencies, say AUD so far, and even NZD, one of the weakest currencies, so far today, the net change is just about 0.15%. Basically nothing there, right? So, I mean, generally there's ups and downs. We could look at, AUD card and we'll look to latch onto that. But in terms of convictions, in terms of how much we're feeling the moves that we're seeing right now, it's not really there. And then owing to the fact that we have FOMC coming up later tomorrow, we have a light calendar today. There's so much mixed environment. High betas are leading, high betas are lagging. How about we be more patient and look out for or stick to our longer term opportunities, longer term biases, and not looking to force anything new in the short term. On the calendar, it's basically a light one. This is today, basically, right? Not much. The Bank of Japan monetary policy meetings that we had earlier was basically, the same thing. Nothing changed really. I think from the summary that we usually have about 2 weeks after the meeting, you get more juice from the Bank of Japan, meeting compared to the minute. So basically nothing there. And then consumer confidence is what's expected later today. But aside that, there's really nothing on the calendar. So it's gonna be another messy one today. I'll be more patient, be more cautious, and wait out for something more concrete. But don't forget that Europe energy, crisis is the major focus, and any new headline, any new development could spark asset prices, later in the day. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you, and do enjoy the rest of your trading session. Goodbye for now.